Hello, fellow deal makers. Welcome to another episode of the Deal Scout. I'm your hostess, Susan Reilly, and our guest today has lessons to share about a relatively quiet but lucrative investment opportunity with fantastic tax benefits. He has lots of knowledge about the subject, partly due to his immersion in his home area of Austin, Texas. So enjoy this conversation. It's going to be fun, and you're going to be excited to hear it. This is Bryan Hancock. Welcome, Bryan.
Thanks for having me, Susan. Looking forward to chatting with you.
Yes, this is going to be fun. This is going to be fun. So you live in Austin now, right?
I live in Austin. I'm one of the unicorns here, believe it or not. I was born and raised here, which is very uncommon now.
Yeah.
I live out in Williamson County, which is a suburb of Austin called Round Rock. But
Okay.
I've been here almost my whole life. I spent about 5 years up in Fort Worth right after college, but got back to Austin as soon as I could.
Yeah. Well, it's really, Austin has really grown. I saw the population in 1980 was like 350,000, and now it's getting close to a million. So what changes have you noticed in your lifetime there?
Yeah, so it was a sleepy college town growing up. In fact, my parents grew up here, and they tell me stories about I-35 being constructed there right through downtown. And, the city used to end not too far north of where we grew up. But I think that the greater MSA in Austin is actually over 2 million now, 2.5 million. It's quite a bit. I think we're I'll say like 29th or 27th or something like that on the MSA rankings. But it's definitely grown a lot. You can't go anywhere downtown without seeing, 15 or 20 cranes building stuff. COVID and, the interest rate hikes of late have kind of slowed that down a little bit. But I definitely think the city is poised for continued growth. Joe Rogan moved here recently. There's a bunch of the comedy scene. Elon built a big Tesla facility here. So we're definitely up and coming in the world.
Yeah, sounds like it. Sounds like it. So, with your childhood there, do you remember anything in your childhood that, or was it your parents or somebody you knew that sort of inspired you to become an investor and an entrepreneur?
Yeah, my mom, there used to be this show called Family Ties back in the 80s. She used to always
Yes.
call me Alex from Family Ties. So I've always kind of had it in my blood for whatever reason. But my parents did do quite a bit with rental properties. So I grew up helping my dad renovate our rental properties and deal with the tenants and toilets and things like that. So I kind of came with the territory, but I always kind of had the business spirit. I did do the engineering school at UT first, primarily because it was a really hard major. Didn't really fit the best for me, honestly, but I did a business foundation certificate there. And then when I finished, I did my MBA program. And one of the things that you learn when you go to MBA school is they teach you a lot about operating other people's businesses, but they don't really teach you a lot about entrepreneurship, even though I tried to specialize in that track when I went there. So out of college, I went and did a 2 year real estate training program in Phoenix, and I've just since done all sorts of other programs and started networks and things like that. So I guess it's part family, upbringing, and it's part I think some of it was just imbued in me naturally for whatever reason.
Yeah, well, that's an interesting combination that the engineering and business, which in a way, makes a lot of sense, and what we're going to talk about coming up here in a few minutes. But that's an interesting combination of knowledge that you gained in college. So I want to turn now to what what do you think over the years and all your entrepreneurial pursuits, what do you think was the most surprising thing that really ever happened to you?
Oh, there's been lots of surprising things. In fact, I like to call that dumb tax. So I've paid my fair share of dumb tax throughout my life.
I like
Just
that.
learning about how to put real estate deals together. But I had a challenging divorce many years ago. I think that's probably the most challenging thing that I've had happen in my life.
Mhm.
So really kind of reset some of my priorities with my kids, my family, and just sort of reoriented me in the world. Forced me to do a lot of work on myself too, which I've done over the last 5 years. So I'd like to think I'm a better operator, investor, fund manager, all of the things as a result of that experience. But that's definitely the most challenging thing so far.
Sure. Yeah, that's I can I can attest to that. That the divorce thing is a really hard place to be, but you do
Right.
learn a lot, right?
Yeah. Yeah, I learned a lot about myself and, basically about relationships too, how important relationships are with people. Um, I'd like to think, I was a pretty, and probably, still am to a certain extent, a very aggressive young man growing up. And it's definitely taught me, given me a big dose of humility over the years.
Hmm. Would you say that's the learning humility was the biggest success, or I should no, maybe I shouldn't say it that way. Your biggest learning point from your divorce was learning humility?
Humility and, just I think a lot of entrepreneurs are guilty of this, but you can really overcorrect or basically over index on certain things in your life, making money, spending time doing that. And all that stuff's important, especially as a male. Males derive a lot of their sort of self-worth from their work and their status in the world. I mean, those things are certainly important, but making sure that you're trying to be as balanced as you can in your life. It's really hard to be balanced as an entrepreneur, though. There's always claims on your time for sure.
Right. Yeah. There are always claims on your time, and always your mind's always spinning to do all these different things, and you can overwhelm yourself with so much, and be hard on yourself too. Is that how you are?
Yeah, I'm definitely hard on myself. I think I'm harder on myself than, anybody else is. And then I also think that, it's easy to sort of have your brain there, and not be fully present when you're there with your family or other things. So that's one of the things I've had to train myself to do a lot better.
Right. Right. Yeah. Yeah. Right. Well, what would you say within your business life then? What would you say is your biggest success that you've had?
Yeah, we've actually been successful in developing, I think, 60 real estate projects here in the Austin area. So that's something I really am proud of.
Mhm.
Almost all of which have made money. It's been a little challenging the last few years. The market hasn't been great here, but that's probably the thing I would point to as our biggest success so far in business. We are starting a new fund right now, which I think we're going to talk about some, and yeah, I think just given the macro positioning, that's hopefully going to be our next biggest success ongoing, but that's sort of forward looking. So if you talk about stuff that's already done, that's probably our biggest success so far.
Gotcha. Yeah. 60 projects. Like, and those were what, like apartments or what?
No, they're primarily ground up development projects. So our firm is specialized, or like I have across several firms, specialized in ground up development projects in Austin. So it's growing. There's a lot of gentrification. There's a lot of revaluing of things. And so finding opportunities to buy something, tear it down, build two or four, or however many units, and sell them off to somebody. That's kind of been our specialty over the last 10 years or so. The market's really not great for that right now in town. It's just, it got too cool to do it. So I like to tell everybody I was doing it before it was cool. But it's a little bit expensive right now. So there's probably other risk adjusted projects that are kind of a better use of our time.
Sure, sure. Okay. What have you, I do want to come back to the fund, but before we get to that, the new fund, but before we get to that, what have you not done in business that you'd like to do?
I've always wanted to operate a startup. So I mean, we had a startup called Real Starter for a while in the equity crowdfunding days. Maybe that's something for me later in life, but it's a different way of operating the company. I'm very much used to real estate or project by project things. Operating a startup is very different. There's a lot more risk. There's a lot more things that could go wrong. There's a lot more competition generally if it's a good business. So that's something that probably I would like to do at some point in the future.
Interesting. Okay. Okay. Any particular kind of startup? Like,
Oh, it'd probably be something in the real estate tech or, that sort of industry. That's somewhere where I feel like I could add a lot of value,
mhm.
just given my background. But maybe it would be something like in the oil and gas space too. Who knows?
Yeah, yeah. Okay. Well, stay tuned for that. We're going to have you back at some point, but we'll also talk about that later. And later in the show, we'll talk more about that. So let's turn now to the investing side, because I know you have a really big interest in the oil and gas industry, and I believe you've spoken about it before, about the tax benefits that come with that, tax advantages, and everybody who doesn't like a tax advantage, right? Everybody does. I've read that the USGS estimates there's a great deal of undiscovered resources in what's it, the Austin Chalk and the Gulf Coast Basin, right? And those two areas are right around Austin. Is that right?
It is, yeah. Our firm specializes in dealing with an operator that, or a couple of operators that have projects in the Eagle Ford Shale, which is south of there.
Okay.
There's a little bit different risk profile on the Austin Chalk. But what we're talking about specifically is fracking technology, or basically non-conventional wells,
Mm-hmm.
which have a little bit different characteristics than the historical wells. And we can talk a little bit about the tax benefits if you want to do that. That's what originally interested me to the space. I've been going to the same commercial real estate meetup for, I don't know, 15 years. And there was an oil and gas broker that came to our meetup, I don't know, probably 3 years ago or so now. And he stood up and said, "Hey, who has a really big active tax problem? Active tax income problem?"
Mm-hmm.
And my ears perked up because that's definitely our situation. And so he proceeded to educate me on the tangible drilling costs and basically how you can deduct them all in year one against your active taxable income. And then also, like, the first 15 cents on the dollar that comes out of these projects is tax free as well. So there are certain IRC codes about that, and I'm definitely not a tax expert,
Mm-hmm.
but I do like to fashion myself as somebody that loves to try and get tax breaks. So that's our by far our largest expense, and that's what originally attracted me to these opportunities. I always like to tell people that are interested in it that you shouldn't invest in anything just because of the tax benefits, right? They need to be good standalone projects, risk adjusted. So I did quite a bit of diligence on everything before we decided to invest. But my wife and I have started investing in these deals. I think we've done 5 of them now. And we opened a new fund. It's called the Texas Freedom Fund recently to be able to offer the same sorts of opportunities to others. The way that these deals normally go together is you have to invest like on the order of $250,000 per share for a working interest in these projects. But our fund is offering to let people in for as little as $25,000.
Oh.
So that's something that we've opened up to try and sort of get the opportunity open to more investors, and hopefully be able to pass some of these tax savings through to folks too, so that they can keep more of their hard-earned money. Because it's not really just about what you make; it's about what you keep, right? And
Right.
how hard the investments are working for you.
Yeah, yeah. Okay. So 25K investment, a start investment. That's really very low.
Yeah.
What kind of a ROI is that?
So, I mean, I can't promise ROIs, but the projects that we've invested in so far are tracking to do like 30 to 50% annualized returns. That's obviously the biggest factor in these is the price of oil, right?
Mhm.
So if oil is at $60 a barrel, they're going to do quite a bit different than if it's at 90 or $100 a barrel. One of the things that I've learned studying this is that there are a lot of world interests in keeping the price of oil kind of between $60 and $90 a barrel. So what you'll find is if it gets much lower, a lot of the OPEC and OPEC plus countries will start to pull back on production. And if it gets too much higher than that, that could potentially drive a lot of the world economies into recessions. So they tend to produce more. So that's sort of like the sweet spot is that 60 to $90 a barrel range. The specific operator we're dealing with, their break even cost is $18 a barrel. And so that's why we've been so successful dealing with the projects that we're dealing with. Um, but there's certainly risk. There's risks in all deals. Really, the biggest risk I'd like to say is the price of oil and the fact that they could extract the oil from the ground a little slower than they were hoping to when they
Mhm.
first got into it. I mean, it's a giant construction project underground, so there's lots of things that could go wrong. But the person that we're dealing with has been doing this for 35 years. This is what they do, and they've got a long track record of success.
Well, you said a minute ago that not it's there's conventional and non-conventional ways of drilling, and I thought you were indicating that fracking is really considered a non-conventional way. Is that right?
Yeah, so a conventional well, just think of it like drilling a soda straw in the ground, right? Soda
Right.
straw in the ground, you're trying to find a well. What's great about these projects is that you're drilling a soda straw on the ground and you're turning it sideways. And not only are you turning it sideways, you're doing multiple wells. And then after you get the multiple wells drilled, you blow big holes in them through the fracking process and suck the oil out. And not only that, through the Railroad Commission, you actually can see all the production data around you. So, one of the analogies that the folks I deal with like to use is like opening a hamburger stand and you're able to see like what all the hamburger sales are around you. You're opening a Wendy's and you get to see what Burger King and McDonald's and everybody else is doing around you. So it's not like you're trying to figure out if there's oil there. There is oil on the ground. The bigger challenge is, are you going to be able to get it out at the rate that you want to? And what's the price of oil going to be at when you start to suck it out of the ground?
Mm-hmm. Mm-hmm. Okay. Okay. Well, so it's so conventional is drilling straight down. Non-conventional is not. It's drilling down and then out laterally, I suppose. Is the risk that there won't be oil there? I mean, that seems like a pretty small risk, doesn't it?
Yeah, it's a very small risk for this. I mean, the bigger
Mhm.
risk is that you're not going to extract it out at the rate that you want to, or the price of oil is going to be different. The
Mhm.
likelihood that you're not going to hit oil when you drill through this giant shale formation for half a mile and frack it is really low,
Mhm.
right?
Mhm.
Now, there could be problems with operating the well. That's why you do multiple wells to sort of mitigate that risk. It's not a foolproof science, but that's one of the things I like about it is that, you get to see the production data all around you. So it's a pretty good risk adjusted bet. And you mitigate a lot of the major risks with multiple wells and then also with insurance and things like that through the operator. Also get to take advantage of the tax benefits. The tax benefits were originally put in place in the 80s, like in the 86 era with Reagan, when they
Okay.
were trying to encourage drilling for these, vertical soda straws in the ground. And
Mhm.
it's really kind of never gone all the way away. So it's still encouraging production, but, honestly, um, from a risk adjusted standpoint, they probably don't even need the tax benefits to encourage people to go after these,
Mhm.
but they're
Mhm.
still there. So it's great.
Right. So with the one thing I always wonder about though, again, someone unfamiliar with this, although very much interested in it, um, I wonder, with the new administration, so they're wanting to open up the oil and gas production in the US, right? So if they're doing that in places like Alaska and along the pipeline and Texas and out, wherever, if they're doing that and they're opening up more of that exploration, they're going to be producing more oil. That's going to drive the price down, right?
It could, right?
Mhm.
One of the things that you find when you study this is the oil market is really a global market, right? So it's not just what the US is doing, it's like what's going to happen with all of the other markets that are producing oil. And
Mhm.
there's lots of forecasts about that. One of the things that I kind of hang my hat on though is that there's this AI revolution. The demand for energy is not going away, right? So I know there's a bunch of green technology and things like that, but there's a reason that very smart companies like Microsoft are building all of their data centers right next to 3 Mile Island and all of these nuclear facilities and places like that, because they're very worried about access to energy in the country. And I think that if anything, the demand for energy is going to go up, not
Mhm.
just because of that, but also because there's emerging economies that are still growing and they're still growing their middle class. Like India is a big driver. There's lots of folks that are still, wanting all the niceties that we have here in the West,
Mhm.
and that's going to drive sort of a global demand for oil significantly.
Okay. Okay. Yeah, and it's not just to put in the cars. I think I read that somewhere I mean, a lot of the oil and gas is used for other things you wouldn't even think of. Like making this pen, right? Things you don't even think of, and so it's a huge industry. Why do you think the typical investor like me has overlooked investing in oil and gas so far?
I think the big thing is just the perception that it's risky, and there are risks, right? There's risk with drilling, there's risk with investing in a private placement for a real estate project. There's risks in any sort of alternative investing, like I think your show focuses on. But
Mhm.
I think once you start to study it more, the more I studied it, the more I felt like the risks were tolerable, right? Um,
Right.
the big risk is the price of oil and gas, right? So
Mhm.
it's certainly not something I think people should be investing 100% of their portfolio in. It's something that's suitable for their risk capital part of the portfolio if they're an accredited investor. But I do think, based on everything I've seen, I think that it's a much better investment than any of the real estate projects that I've been doing for the last 20 years.
Okay. That's a big endorsement
Yeah.
for oil and gas
Well, that's why I'm
investing, isn't
spending
it?
so much time doing it, right?
Yeah, sure, sure. Yeah. Okay. So with somebody like me, again, somebody like me that's is interested in it but hasn't followed up on it or done anything about it, what would you say is the first thing somebody like me should do to educate and be comfortable then putting at least 25,000 into something?
Yeah, there's a bunch of great content on YouTube, believe it or not. You can just, do some YouTube searches on oil and gas investing, um, research intangible drilling costs, IDCs, and sort of the tax benefits of that. Um,
Intangible drilling
yeah,
costs, IDCs.
IDCs, yeah, that's what basically gives you your active tax treatment if the investment's structured the right way, which ours is. And then, I think the big thing for anybody that you invest with, and this kind of goes for an oil and gas investment or real estate or anything else, is you have to know, like, and trust the person that you're investing with.
Right,
Is
right.
that person, do they really have access to great deal flow and deal opportunities? Do they know how to underwrite the risk properly? You know, and even if they do those things properly, are they sharing, the right amount of the proceeds from that investment with you as the investor? Like how much do re mi is coming back to you in that investment? Those are really the big things, right? And so a lot of that's just a matter of getting on the phone with somebody, asking them tough questions, really trying to dig through their materials and understand it as well as you can. How much experience do they have doing what they're trying to do? Those are all really critical factors in selecting who you're going to put your hard-earned dollars with.
Right, right. Well, with the Texas Freedom Fund, and if let's just say, for example, putting 25,000 in, how does that work? Do you pay like monthly dividends or is it an annual thing? How's that work?
Yeah, so the way that the right now we're setting everything up with special purpose vehicles to start. Everything will fold into a main fund later on. We offer basically a 90-10 split to investors. So we take 10, they take 90 of the proceeds. The projects generally take about, and it depends on the project, 4 to 6 months to get the well drilled, to get everything operational. And then after that, we start to deliver returns to folks every month. So it's like mailbox money, just like real estate.
Okay, great. And did you say earlier that it has to be an accredited investor? Is that
Right.
a
Yeah, we're
requirement?
structured as a Reg D exempt fund, so
Okay,
Reg D Rule 506C. So you do have to be an accredited investor to invest.
gotcha. Okay. Okay, cool. Cool. Wow. Well, I think that's really interesting. I'm going to look more into that and look into the YouTube content on oil and gas investing so I can educate myself on that. And the IDC, intangible drilling costs, tax benefit. I love that. Yeah. So I want to ask you a couple other things and then I'll let you go. So what are you passionate about now in like right now in your life, but also in your immediate future? What gets you up and excited in the morning?
I'm a deal junkie. So I love to do deals. So believe it or not, structuring this fund has been really complicated. So that's something that's really turned my crank. I really enjoy spending time with my wife and my kids as well.
Right.
So they're kind of at a fun age. And my youngest is 3 and our oldest is 15. So that's kind of the range. So they still like hanging out with mom and dad for now. But, a couple of years from now, they're going to be too cool to do that. So that really much consumes most of my time right now, is putting together deals, time with the family, and working. So that's unfortunately like that's most of the days right now. But one of the things I like about it is I really love what I do, and so it's not like work for me.
Right. Yeah, that's a good thing. That's the place to be. And I got to tell you, you're young enough to, if you feel that way about what you're doing, about your professional life, that it's something that you really are interested and love doing. If you feel that way now at your age, that's awesome because well, most people don't even ever get to that. But if they do, it's later in life like me. Quite a few years past you, but later in life when I can finally say, I really like what I do, and that's a good feeling to finally be
Yeah,
there. So congrats on getting there so early. And with all those youngins at home with you, that's a really fun time of life too. So that's
yeah,
kind of cool.
yeah.
You have it all going at once. That's great.
Oh, it's chaotic for sure,
I'm
but
sure.
balancing investor calls with deals, with work, with the kids at home, with there's just a lot. So,
Yeah,
but my
sure.
wife and I are very good jugglers, so we're good at juggling all the things.
Yeah, you must be good team players too.
Yeah, we try to be.
Yes, for sure. Cool. Well, okay, so one last thing. What have you not done in your personal life that you really just can't wait to do?
My wife and I are travel junkies too, so unfortunately, with all the things that we've got going on, it's challenging to do that. So we've got a really long travel list. In fact, I keep it on a notepad in my cell phone. So I just haven't been able to go all the places we've wanted to go. We did get a chance to go to Europe last year, I think one time.
Fun.
But
Yeah,
there's a huge travel list right now that when the kids are all grown up and gone, we'll hopefully be able to get to do more of that.
absolutely. Sounds good. That sounds great. Well, fellow deal makers, I invite you to reach out if you have further questions for Bryan, or if you're thinking investing in oil and gas and want help getting started, he'd be happy to help you with that. So click the link below or find the link in the show notes. And as you know, I'm always on the hunt for other guests like Bryan, where we can learn more about scouting deals and scouting investments and making our money work for us in the best ways possible. Everybody loves a good investment, right? Yeah, everybody. So if you'd like to appear on the Deal Scout to talk about your deals, I'd love to hear from you. Reach out to me at susan@thedealscout.com, or again, click on the link below. And that's it for now. Bryan, again, thank you for joining us. I enjoyed talking to you and hearing about your oil and gas pursuits. And have a terrific day, and we will see you again soon. This is Susan Reilly with the Deal Scout signing off.
Thanks, Susan. All right.